Dear students, very good morning and hearty welcome in this weekly series of practical training modules. I'm pleased to inform that Student Skills Enrichment Board is conducting these sessions every Sunday from 10:30 a.m. to 1 p.m. With an objective to impart standardized training on the practical aspects of various important concepts that we learn from our textbooks and expected to implement during our practical training. So the topic of the day is input tax credit and accounting. As you all know, ITC, input tax credit, is one of the most important feature in GST regime, which has been specially designed to mitigate the cascading effects of taxes and make GST a destination-based tax. So I'm pleased to welcome the speakers for today's session. Today we have CA Jayesh Ramesh Lalwani, and Mr. Lalwani is our has achieved a 41st rank in All India in CA Intermediate, and his area of practice is in GST income tax and audits, and he's practicing since 2006. Earlier, he also holds a position of the chairman of Jalgaon branch in the year 2014-15, and apart from that, he was also president of Lions Club of Jalgaon Central. So I welcome you, sir. Thank you so much for giving us this time. And our other speaker for the day is C. Abhishek Agrawal ji. Abhishek ji is a certified forensic auditor, and apart from CA, he has also completed his LLB. He is also a certified concurrent auditor and a GST member of ICI. So from since 2019, he has always been invited as a special invitee to our GST and Indirect Tax Committee, which is looking after all the indirect tax requirement from ICI. So thank you to both our faculties for taking out time on the Sunday for the benefits of our CA students. Now, may I request CA Jayesh Raman Lalwani ji, may I request Mr. Abhishek Agrawal ji to please start with the session and give us the background of this topic before handing over it to Jayesh Raman ji. Thank you so much. Over to you, sir.
Thank you, Alok sir, for the warm introduction. Good morning, dear friends. So it's really an honor what ICI is continuously taking steps, to educate, to connect with all the students and to give them the actual, the reality of how the industry performs, to give them a flavor how the industry performs. Keeping that, today's topic is input tax credit and accounting series. So what I will say is in GST, the media always throw a light of fake ITC of this amount, right? This person got arrested for this ITC thefting and all that stuff. So what is input tax credit? The input tax credit rather is the blood of the GST, right? If in a human system, in a human body, if you understand the role of the blood in the body, input tax credit can be defined as a blood in the GST system, right? So backbone is different to my interpretation. The blood is the input tax credit. So you can understand that it is that important, right? Going with the accounting entries, accounts and records, debit note, credit note, I will just give you an essence. Please understand, today if you go to a consultant or a person, ki boss, this is a situation, this is a scenario, what do you suggest? This person, say for example, say, okay, you take the credit in this month and you reverse the credit in this month, you reverse accordingly to DRC03 and you put it a reconciliation note that whensoever your notice come for audit, after 3 years, you can present the same. This consultant said for 15 minutes, charged his money and went away. Now it is us who have to be very specific what he said. What was given has to be executed in a very root level. So let's say a proper entry has to be passed so that all the proper ledgers can be tagged. a reversal entry should be ensured with all the reference number, so that a proper because see, books of accounts in our books of accounts in lay terms, if we say tally or busy or whatsoever accounting software we are using, the balance sheet which we are using and the accounts and records of GST, that is altogether different, right? When we study in more depth, we will understand it's quite a huge bridge. In fact, for the benefit of, like, again, it's my version, for the benefit of the department has asked the SSC to file GSTR 9C, a form which bridges the GST books of accounts and the audited financial statement books of accounts, which have a proper reconciliation that your GST turnover is 2 crore rupees, your books of account is 50 lakh rupees, then why the difference is coming? So there are three separate books of accounts which has to be taken care of. The accounting entries will help you to identify the each and every step. If you have the clarity of the accounting entries of each transactions, then this can be very, very helpful for the organization, right? We can help the organization in a very greater way to ensure that we have a proper holding of all the nitty-gritties, right? And in giving the stage to Jayesh, I will just add the last point. We also have a fight of input tax credit reconciliation, books of accounts versus GSTR 2A, books of accounts versus GSTR 2B, right? So for layman, it might be a huge hue and cry, but for professionals, it is something which is our duty, right? To guide our clients, to help our clients in reconciliation each and everything, right? Having said that, I request Jayesh to take the session forward.
Thank you, C. Abhishek ji. I first of all thank ICI Board of Studies for giving me this opportunity to share my views and opinions on input tax credit along the students and future chartered accountants throughout the India. I also thank Alok ji for giving my brief introduction. Now let's move on the topic directly. As a basic introduction has been given by C. Abhishek ji. Alok ji, my screen is visible? Okay. Friends, my first topic is what is input tax credit. I will define input tax credit as per CGST Act. It has been given in two parts. First is input tax. What is input tax? Input tax includes IGST, including that has been paid on import of goods, CGST, SGST, UTGST, charged on any supply of goods or services or both received by the recipient. And it also includes the tax paid by the recipient under reverse charge mechanism. But friends, mind well, it does not include tax which has been paid under composition levy. That means if someone purchases the goods from composition dealer and he pays the tax at rate of say 1% or 5% on it, he will not get the credit of that input tax. So input tax is defined in section 262 of CGST Act. Then what is input tax credit? It's defined in very short mean. Input tax credit means the credit of input tax. That means the input tax which you have paid and the credit of that you will be getting while filing your returns is the input tax credit. Input tax and input tax credit, both the definitions are not defined in IGST Act. They are defined only in CGST and respective state GST Acts. Now some important definitions which will be useful for our this topic understanding. First is input. What is input for a registered dealer? input is defined in section 2 subsection 59. Any goods other than capital goods used or intended to be used by a supplier in the course or furtherance of business. यानी कि हम अपने बिजनेस में जो कुछ भी परचेसेस करने वाले हैं कैपिटल गुड्स के अलावा, जो हमारे बिजनेस में हमें यूज आने वाला है, वो सब चीजें जो भी हम परचेस कर रहे हैं उसे हम इनपुट्स कहेंगे. नेक्स्ट इज इनपुट सर्विसेज. इट हैज बीन डिफाइंड इन सेक्शन 2 सबसेक्शन 60. Now first section 259 was related to goods. Now it is related to services. It is any services used or intended to be used by a supplier in the course or furtherance of business. यानी ऐसी सर्विसेज जो हमें हमारे बिजनेस में काम आने वाली है. Then third is capital goods. It is defined in section 2 subsection 19. The value of which is capitalized in the books of person claiming the ITC. Mind well, the word is capitalized is very important in this. The value of which is capitalized in the books of the person claiming the ITC and which are used or intended to be used in the course or furtherance of business. You can observe in all these three definitions, the common thing is in the course or furtherance of business. यानी हम उसको बिजनेस में यदि यूज करने वाले हैं तो ही वो हमारे लिए उसका इनपुट काम आने वाला है. If you are not going to use it for our business purpose, we cannot get its ITC. Next, what are the eligibility and conditions for taking section 61? Now input tax credit has been dealt with in chapter 5 of CGST Act, in which the first section is section 16. What is the eligibility? Who will get the input tax credit? First word is very important. Every registered persons. If you are not registered and if you want to take ITC, friends, you cannot take. You have to be registered yourself under GST Act. So every registered person shall subject to such a conditions and restrictions. All the conditions and restrictions have been prescribed in further sections and rules. In the manner specified in section 49. How to take the ITC? That manner has been specified in section 49. Will be entitled to take credit of ITC. So every registered person will be entitled subject to these conditions and restrictions, which are charged on any supply of goods or services both to him, which are used or intended to be used in the course or furtherance of business. And the said amount shall be credited to his electronic ledger. यानी जो कुछ भी इनपुट टैक्स क्रेडिट हमें हमारे बिजनेस के लिए हमें मिलने वाला है वो हमारे इलेक्ट्रॉनिक क्रेडिट लेजर में क्रेडिट होएगा और उसके बाद ही हमें उसे यूज करते आएगा. देन व्हाट इज द प्राइमरी कंडीशन फॉर टेकिंग ITC? सेक्शन 16 सबसेक्शन 62. Sorry, section 16 subsection 2. No ITC can be claimed unless the dealer is in possession of tax invoice or debit note or any other document issued by the supplier registered under this act. Any other documents means क्या? जैसे इनपुट सर्विस डिस्ट्रीब्यूटर एक चलन इशू करता है वो है, या फिर जॉब वर्कर का एक चलन इशू करता है वो है. तो ये डॉक्यूमेंट्स हमारे पास रहना जरूरी है टू क्लेम द ITC. देन जो इनवॉइस और डेबिट नोट्स हमें मिल रहे हैं वो हमारे सप्लायर ने GSTR 1 में और इनवॉइस फर्निशिंग फैसिलिटीज के थ्रू IFF जो हम फाइल करते हैं उसके थ्रू GSTR पोर्टल पे वो चीजें अपलोड करना चाहिए और वो हमारे 2B में रिफ्लेक्ट होना चाहिए. दिस इज अ बेसिक कंडीशन which has been from last few years. They have given 120%, then 110%, then 105%. Now from 1st January they have made it compulsory that if the ITC which we can claim should be reflected in 2B, and it should be limited up to ITC which is reflected in 2B only. We cannot take excess ITC than what is reflected in GSTR 2B. So very important point. Then goods or services both has to be received by the registered dealer. For example, say Mr. A have sold the goods to Mr. B, but meantime Mr. B got the order from Mr. C that he should give me the goods, he should supply me that goods. So what will Mr. B do? Mr. B tells Mr. A to directly supply the goods to Mr. C, so that goods यानी उसमें उसका टाइम फ्रेम और एक ट्रांसपोर्टेशन का खर्चा बच जाता है. सपोज मिस्टर ए स्टेज इन मुंबई, मिस्टर बी स्टेज इन अहमदाबाद एंड मिस्टर सी स्टेज इन इंदौर. तो अहमदाबाद वाले डीलर ने मुंबई वाले डीलर से गुड्स परचेज किया और उसको मीन टाइम इंदौर से ऑर्डर मिल गई. तो अहमदाबाद वाला डीलर क्या करता है कि मिस्टर ए को कहता है कि आप बंबई से गुड्स अहमदाबाद ना भेजते हुए सीधा इंदौर ही भेज दीजिए. तो क्या ये कंडीशन सेटिस्फाई होंगी दोस्तों, जो सेक्शन 16(2) में है कि गुड्स और सर्विसेज हैव बीन रिसीव्ड? यस, it has been given in proviso that even though goods have directly not received to the dealer, but on the instruction of dealer it has been received by the third person, then it will be treated as goods have been received. The same is the case for services. Suppose Mr. A, who is from Mumbai, providing services, and Mr. B having the office in Ahmedabad, he is starting the branch in Indore. He tells the service provider Mr. A from Mumbai to do some repair maintenance work or some service related, give order for some repair maintenance work to Mr. A to do it in Indore. Then that service has been delivered in Indore, but it has been done on the instruction of Mr. B. So this has been also been treated as goods or service, both have been received. So friends, kindly understand this. Then the tax payable on such a transaction is being paid either by cash or credit. जो सप्लायर है उन्होंने जो इस ट्रांजैक्शन के ऊपर का टैक्स है वो आइदर कैश लेजर और क्रेडिट लेजर के थ्रू पेड करे हुआ होना चाहिए. एंड द मेन कंडीशन, रिटर्न हैज बीन फर्निश्ड. सो ऑल दिस 5 कंडीशन हैव टू बी सेटिस्फाइड टू गेट ITC. नाउ one proviso has been given in this section where the goods are received in lots or installment. Suppose कि मैं रजिस्टर्ड डीलर हूं, मैंने एक सप्लायर को 1 करोड़ रुपए का गुड्स सप्लाई करने का ऑर्डर दिया, बट वो गुड्स अगले 3 महीने में डिलीवर होने वाले हैं. दिस मंथ इज जून 22 में मैंने ऑर्डर उसे प्लेस किया और गुड्स जून, जुलाई, अगस्त ऐसे 3 अलग अलग इंस्टॉलमेंट में मुझे मिलने वाले हैं. तो जो सप्लायर है उसने आज जून महीने के अंदर इनवॉइस मुझे रेज कर दिया. फॉर द सेक सपोज मैंने उसको आज पेमेंट भी भेज दिया, तो क्या मैं आज उसका जून महीने के रिटर्न में GSTR 3B में उसका ITC क्लेम कर सकता हूं क्या? नो, आई कैन नॉट क्लेम दैट ITC बिकॉज the last installment will be received in August. Even though I have paid entire money in June, even though I have received invoice in the month of June, but since the last installment will be received in August, I will be getting that ITC in the month of August only. Next is reversal of ITC on failure of payment. It's very good, welcome decision from the angle of supplier. Suppose any supplier supplies the goods, but he does not receive the payment within 180 days. What will happen? He have already paid his tax liability, but he does not get the payment. So there is a one proviso which says that reversal of ITC on failure of payment. If the recipient of goods or services fails to pay to the supplier value plus tax within 180 days from date of invoice, then ITC availed shall be added to the output tax liability along with interest. It means, suppose I have purchased a goods on 1st of April and let's say 180 days completes on 30th September. And if I do not pay within this period to the supplier the entire amount of value plus tax, then I need to reverse that ITC in the month, and I also have to pay the interest from the date from which I have taken the ITC. Then suppose I pay back the amount to the supplier after 2 years. Firstly, after 180 days, I have reversed the ITC. Then after 2 years, I have paid back him the entire amount. So can I get that ITC at that time? Yes. There is no time limit for availing such ITC. We can take the ITC whenever we pay the entire amount. This provision is not applicable to Schedule 1 supplies, that is the supplies of goods or services which are treated as supplies but without consideration. Now section 16 subsection 3, this deals with capital goods. Suppose I have purchased a capital goods, let's say of rupees 1 lakh rupees, on which I have paid a GST of rupees 18%, that is 18,000. So in my books, the goods will be of 1,18,000. If I take the depreciation on entire amount, that is on say 1,18,000, then I will not get the ITC of 18,000. But if I take the depreciation only on 1 lakh, then I will get the ITC of entire 18,000 rupees. So while accounting for the capital goods, you have to be careful that you are not taking depreciation on tax amount, so that you can get the ITC of entire amount. The same example what I have mentioned has been given in this 1,000 rupees cost of asset, tax paid is 18%, 180, total cost is 1,180. So if depreciation is charged on 1,000, I will get the entire ITC. If depreciation is charged on 1,180, I will not get the ITC. Then friends, what is the time period to avail ITC? It has been mentioned in 16 subsection 4. From this budget, this change have been made that ITC can be claimed up to 30th November. I have mentioned it either from reverse angle. ITC cannot be taken after 30th November following the end of financial year to which such a invoice or debit note pertains. It means before 30th November, the return, whichever return you are filing before 30th November, you can claim that ITC of the previous year, or furnishing of relevant annual return, whichever is earlier. Let's take an example. For the year 21-22, you have filed the annual return. You are filing the annual return on 31st of July. As your books of accounts are finalized, audit is finalized, you are filing your annual return on 31st of July. So can you take that ITC, if some ITC has been left away to be taken in 21-22, can you take that ITC after 31st July, say in the month of September return which you filed in October month? Can you take that? No friends, because you have already furnished annual return. So, but second case, in some of the ITC has been left to be taken away in 21-22. Now you came to know while filing the return of the month of October, which you are filing in the month of November, but your annual return is yet to be filed. So can you claim that ITC? Yes, you can claim that ITC before 30th November, as the condition is you can, section 16.4 it is given as you can claim the ITC before 30th November or furnishing of annual return, whichever is earlier. So you have to be careful. Then section 17. So I have covered all the entire points in eligibility and condition for taking ITC. Now the next section is section 17, apportionment of credit. Sometimes we receive the goods or services, or both, partly for business purpose and partly for other purpose, let's say non-business purpose, and how we should deal with this situation. Suppose if we can bifurcate the goods which are partly for business, which are entirely for business purpose, we can surely take the entire ITC. And if we can bifurcate the goods which are not for business purpose, let's say for personal purpose, Can we take its ITC? No, friends, we cannot take ITC, because in the start only we have been seen that in all the definition they have used the words in the course or furtherance of business. Since we are taking some goods for non-business purpose, we cannot claim its ITC. Now, sometime also we take the goods which are for goods or services which are related for taxable supplies, including zero rated supplies, that is export, or exempt supplies. So can we claim ITC? Friends, in the case of goods which are directly related to the taxable supplies, including zero rated supplies, ITC is purely available. In the case of goods which are used for exempt supplies, ITC is not available. Now, exempt supplies shall include supplies on which recipient is liable to pay on RCM basis. Suppose I am a transporter on which my services which I giving, transport services, the service recipient is paying the tax on RCM basis. So that will be included in exempt supply. In my case, if I sale of land, building, that will also be included in exempt supply. Value of exempt supply shall not include the value of activities or transactions specified in Schedule 3. Schedule 3 may all the things. Schedule 3, I will read the heading of Schedule 3 for you. Schedule 3 is activity or transaction which shall neither be treated as supply of goods nor supply of services. This transaction will not be included in exempt supply. Now, sometimes it happens that we cannot able to bifurcate in case of any goods which are directly used for business purpose or non-business purpose, or we cannot bifurcate it's used for taxable supply or exempt supplies. Then in that case, we have to refer Rule 42 and Rule 43 for arriving the value of ITC which we can claim and ITC which we have to reverse. So section 17, apportionment of credit, it has been mentioned, it has been clarified. Then next we will proceed. What will be the provision for banking companies and NBFC? How they can claim the ITC? Banking company and NBFC have given two options for taking ITC. First option is comply with the regular provision of section subsection 16 subsection 2, that is the regular provision which are applicable to remaining dealers, other regular dealers. They can go with that option. And second option given to them is avail of every month 50% of eligible ITC in that month, and rest shall be lapse. Means for the month of July, let's say they are having the ITC of 1 lakh rupees. They can take the ITC eligible, they can claim the 50%, that is 50,000 they can claim, and 50,000 will lapse. So very this eligible ITC word is very much important. The ITC which is not eligible, which is block credit, they cannot claim ITC of that in 50%. Only eligible ITC related to their business, they can claim up to 50%. Now, suppose any bank select the option in the month of April for going he select the option 2. Can in the month of July he change go back to option 1? No, friends. Option 1's exercise shall not be changed during the remaining part of financial year. You can change it in next financial year only. Next is very long section. This is section 17 subsection 5, block credit. The ITC which we are not able to get have been mentioned by government in this section. ITC of which things you will not get. First is motor vehicles which are used for transportation of passengers. which are having the approved seating capacity of not more than 13 peoples. 13 peoples is inclusive of driver. So very important, motor vehicle for transportation of passenger. If you take the motor vehicle for transportation of goods, let's say truck or small truck, mini truck like that, you can get the ITC. But if it is for transportation of passenger and having seating capacity of not more than 13%, then you will not going to get any ITC of that. That ITC has been blocked. Then if you purchase any vessels and aircraft, that also you will not get ITC. Then ITC on services of general insurance, servicing, repairs and maintenance as they relate to motor vehicles, vessels and aircraft mentioned above. That also you will not get the ITC. Suppose you purchase any car today, you will not get ITC. After 6 months, you send this car for servicing purpose, and the car servicing center charges you servicing charges plus GST on it. You will not get ITC of that also. That has also been blocked by 17(5). So friends, there is some exception to this part. The exception is when these motor vehicles, vessel, aircraft are used for further supplies, means a car dealer who purchases car from manufacturer and sell it to retailer, yes, they will get ITC. Then someone purchases cars for transportation of passengers, yes, they will also get ITC. Then someone purchases it for training purposes, like for driving some motor vehicle, schools imparting training on driving such a motor vehicle, they will also get the credit. Then navigating such a vehicles, flying such a aircraft, yes, they will also get. Next is, they have also mentioned some list of services of which you will not able to get credit. First is foods and beverages, then outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, life insurance, health insurance, leasing, renting or hiring of motor vehicle, vessels or aircraft. Then membership of any club, health center, fitness center membership, then travel benefits given to employees on vacation. All this ITC you are not going to get. You cannot claim this ITC in your return. These are all block credits. Some exception has been given. If such a goods or services when used for making an taxable supply of same category of goods or services or as an element of taxable composite or mixed supply, they can take this ITC if you are using these services for making further supply of same category of services. Then when there is statutory obligation on any employer to provide these services to employee, then you can claim this ITC. Suppose let's say as per Factories Act, you have been given the compulsion to provide catering food mess facility or food facility to their employees, then it is compulsion on employer to provide this facility. So they can then take the ITC. So it has to be statutory obligation on employer, then and only then they can provide this service, and then and only then they can take this ITC. Next is construction of immovable property other than plant and machinery. Works, suppose you are planning to construct any immovable property, you take a works contract service from contractor, then you cannot take this ITC. But you are a works contract dealer, you further provide works contract services and you sublet some work to another subcontractor. Suppose you have got a contract of building some road of say 10 kilometers, and in this you subcontract some part of your work to another subcontractor, then you are going to get the ITC. So ITC can be claimed only when it is an input service for further supply of works contract service. Then next is goods or services received by a taxable person for construction of an immovable property on his own account, even when used in course or furtherance of business. Suppose you are constructing an immovable property, then you will not get the ITC of any goods or services you have purchased. Even though you say you are constructing a building for which you will be using it for your business purpose, no friends, you cannot get ITC of the goods or services which you purchase for constructing this building. The construction, plant and machinery, both have been defined in this section. Construction includes reconstruction, renovation, addition or alteration or repairs to the extent of capitalization. The capitalization word is very important. Repairs to the extent of capitalization. Here we can say that if I have to repairs to any building and I do not capitalize, I book that expenditure in my indirect expenditure, recurring revenue expenditure. Can I claim ITC? Yes, you can surely claim as per my opinion. Then plant and machinery. Plant and machinery is defined in explanation to section 17 as it means apparatus, equipment and machinery fixed to earth by foundation or structural support that are used for making outward supply of goods or services or both, and includes such a foundation and structural support, but it excludes what plant and machinery does not include: land, building or any other civil structures, telecommunication towers and pipelines laid outside the factory premises. Friends, other than these three, all things will be covered in plant and machinery and you can claim that ITC, but ITC related to these three things you cannot claim. Now, further moving to block credit, another things which are covered in section 17(5) are goods and services or both on which tax has been paid under section 10. Like already said, if you purchase any goods or services from composition dealer, you cannot take the ITC of that inputs. Then goods or services or both received by a non-resident taxable person except on goods imported by him. Then goods or services both used for personal consumption. Anything you buy for your personal consumption, you cannot claim that ITC. Then goods lost, goods stolen, destroyed off, written off or disposed of by way of gift or free samples. In that case, you have to reverse or you cannot take the ITC of these goods. Then any tax paid in accordance with the provisions section 74, 129 and 130. What these provisions say? That is tax paid as a result of evasion of taxes upon detention of goods or conveyance in transit or towards redemption of confiscated goods or conveyances. You cannot claim that ITC. So this was the entire section of section 17(5) in which they have given the list of which you cannot take the credit. So you have to carefully keep this all the list in mind while filing your GST return, because once you claim this ITC and department notices that you have taken that ITC, you have to reverse it and you have to pay interest and penalty also on the same. Now, availability of credit in special circumstances. What are the special circumstances given? Section 18(1) subsection A. If a person is liable for registration under section 25(1), say he crosses the turnover limit mentioned for registration, then he applies for registration within 30 days. Then suppose he crosses his limits of turnover on 30th June, let's say, and he applies for registration within the entire month of July, then he can take the credit of input tax with respect to inputs held in stock, semi-finished or finished goods. as on the date preceding the date on which he becomes liable to pay tax. Now, in our case, when he become liable to pay the tax on 30th June. So, whatever the stock lying with him on the date of 30th June, he can take that ITC in respect of inputs held in stock, semi-finished or finished goods. Then section 18(1)(b). Sometimes it also happens, we take a voluntary registration. If a person is taking a voluntary registration under section 25(3), he can also take the credit of inputs with respect to inputs held in stock, semi-finished or finished goods. From which date, relevant date will be on the immediate preceding date on which registration is granted. Let's say he applies for registration on 1st of July and the registration has been granted on 5th of July. So whatever the stock lying with him on 5th of July, he can take the credit of the same. Sometimes it happens that some dealers shift from composition to regular dealer. Friends, I have to clarify one thing. In section 18(1)(a) and 18(1)(b), they have not mentioned the ITC of capital goods you can take. You can only take the ITC of goods held in stock, semi-finished or finished goods. So you cannot take the ITC of capital goods. Now in 18(1)(c), they have used capital goods. 18(1)(d) also they have used capital goods. What is 18(1)(c)? 18(1)(c) is person ceases to pay tax under section 10. If a dealer is dealing in composition and he crosses the limit of composition, that is 1 crore 50 lakhs. 1 crore 50 lakhs limits he crossed, suppose in the month of January, 31st January, he crosses 1 crore 50 lakhs limit, then he have to we have to shift him from composition to normal tax dealer, and then on whatever the stock lying with him in semi-finished or finished goods, also the capital goods, he can take the ITC of that. The capital goods ITC, how to take, I will discuss it after both the section 1C and 1D. Then this, what 18(1)(d) says, goods or services becoming taxable. If goods or services was exempt on some day, and suppose from 1 January it becomes taxable, then he can take the credit in respect to that in goods for manufacturing that goods, whatever the inputs he have purchased, or semi-finished goods or capital goods which are lying in with him in stock. He can take the ITC of that, and relevant date will be immediate preceding date from which supply becomes taxable. Now, how to do working of ITC on capital goods which were lying in stock on immediate preceding date or relevant date. Eligible to take credit of tax on capital goods, it shall be reduced by 5% for every quarter or part thereof from the date of issue of invoice for the capital goods. In this case, we have to life of capital goods, we have to assume it for 5 years compulsorily, and for each quarter 5%. So it means 60, there are 5 for that 20 quarters will be there, and 5% for each quarter. If an asset has been used for, let's say, suppose you have purchased one asset for 1 lakh rupees on which ITC was, let's say, 20,000 rupees. In 20,000 was the ITC, and you have used that asset during composition period for 4 quarters out of 20 quarters. It means 20 in the ITC of 20,000. You have to reverse. You can take the ITC of 16,000 rupees, 1,000 for each quarter. I will again explain my example. ITC was 20,000. Asset was used in composition period for 4 quarters. So for total life of 5 years, which means 20 quarters. For each quarter, ITC will be of rupees 1,000. and you have already used that asset for 4 quarters in composition period, so the balance life is 16 quarter. So you can claim the ITC of rupees 16,000 in the case of capital goods. Next, how to claim ITC under section 18 subsection 2. What is the conditions? The goods which are lying in stock should not be earlier than of 1 year from relevant date. If you are taking the registration or converting it from composition to regular, or your goods become taxable, suppose on 1st of January, anything of this 3 to 4 situation happens, 1st of January 2022, these things happen, you should have purchased that good from after 1st January 2021. You should not have purchased that good earlier than 1 year from the relevant date. Now, details of inputs held in stock, semi-finished or finished goods and capital goods to be furnished in GST ITC 01 within 30 days from relevant date. You have to file form ITC 01 in these cases to take the ITC. Suppose your ITC is more than 2 lakh rupees, then you have to take that certificate from CA that your ITC you are working is correct, and you have to get it certified from chartered accountant. Next is section 18 subsection 3. There can happen a situation in which there can be a change in constitution of registered person. When there will be change in constitution, it can be on account of sale of business, merger, demerger, amalgamation, lease, or transfer of business. Then transfer of that unutilized ITC in the books can be, you can transfer that the unutilized ITC to the sold, merged, demerged, amalgamated, leased, or transferred business. In this case, transferor have to file ITC 02 and transferee have to accept that form on his portal, and within a second he will get the credit reflected in his electronic credit ledger. In this case, even though amount is below 2 lakhs, transferor have to get the ITC certified from chartered accountant that he is complying the provision of transfer. Then section 18 subsection 4. In this, sometime it happens that some dealer have to shift from regular to composition, or when the goods are taxable, now becomes wholly exempt. In this case, amount equivalent to the credit of input tax in respect of inputs held in stock or inputs contained in semi-finished or finished goods held in stock on capital goods. That amount of ITC you have to debit in electronic credit ledger, and if the balance in electronic credit is not sufficient to meet that reversal of ITC, then you have to pay it through cash ledger. Suppose it can happen, the input tax, the inputs which is lying in your books on the day when you transfer from regular to composition, related to that input tax is suppose say 1 lakh rupees, and in electronic credit ledger balance is 1,50,000, then you will reverse 1 lakh ITC of 1 lakh by debiting in electronic credit ledger, and the remaining balance 50,000 will lapse. In this case, ITC 03 form, in the form name ITC 03 you have to file. Now, ITC in case of sale of capital goods. Suppose you are selling any capital goods lying in your fixed asset. What will be the situation? How to calculate the ITC which we have to reverse? Registered person shall pay an amount equal to the input tax credit on the seed capital goods reduced by 5% per quarter or part thereof, or the tax on the transaction value of such a capital goods determined under section 15 of CGST Act, whichever is higher. So out of the two, whichever is higher, we have to pay the liability. Suppose in example you will get the clear idea. Mr. XYZ purchased a machine on 1st of July 2018 for rupees 10 lakh, on which GST was paid at 18%. On 2nd of October 2019, he sold the machinery for 7,50,000. So first we will determine for how many days how many quarters this assets was used by the Mr. XYZ. July, August, September first quarter, October, November, December second quarter. So in 2018, 2 quarters. Now in 2019, January to March 1, April to June 2nd, and July to September 3. So total 5 quarters. But the asset has been sold on 2nd October. So you have to consider that part also as a quarter only. So it will be for 6 quarter. It will be treated as 6 quarter. If we have sold good on 30th September, then we can say that asset is utilized for 5 quarters. But as he have entered in new quarter, next quarter, that is on 2nd October, we have to say that asset has been utilized for 6 quarter. So ITC what he have taken is 1,18,000 at the time of purchase. And how many quarters he have used? 6 quarter. 5% for each quarter. That means 30. So out of 1,80,000, he can claim the ITC of 54,000. He need not reverse the ITC of 54,000. He have to reverse the ITC of 1,26,000, or this is answer for first option. And for second option, it is tax on transaction value. What will be the tax on transaction value? 18% of 7,50,000, that is 1,35,000. So whichever is higher. So in this case, higher amount is 1,35,000. So 1,35,000 shall be added as output tax liability in form GSTR 1. If any queries, you can ask in between also. Now, let's move further to job work. ITC in case of job work. Suppose sometime what happens, manufacturer purchases goods and send it to the job worker for further job work, or sometime it also happen manufacturer directly sends goods to the job worker instead of without being first brought to his place of business. In both the cases, manufacturer will get the ITC. Now, time limit has been specified within which job worker have to return back the goods to the manufacturer. In case of inputs, he have to return back the goods within 1 year. And in case of capital goods, job worker have to return back the goods within the period of 3 years. Where the goods, inputs or capital goods sent for job work to the job worker are not received by the principal from his place of within a period, then it will be deemed that goods had supplied by the principal. Suppose you supply the goods to job worker on 1st January 2022 and he does not return back the goods before 1st January 2023, then it will be treated that job worker has sent the goods, supplied the goods to the, it will be deemed as principal has supplied the goods to the job worker. Like some technical problem is there.
No, Jayesh, you're audible. You're mute, Jayesh. Jayesh, you're mute. You have to unmute yourself. Please unmute yourself, JS bhai.
Now I'm audible?
Yeah.
Yeah, you are audible, sir.
जय भाई क्या कंटिन्यू?
Yes. मेरा वो स्क्रीन का कुछ इशू हो गया था. हाँ, yes.
Now it is completely fine from the recipient end. अब start.
Sorry sir.
अब एकदम completely दिख रहा है स्क्रीन आपका?
Yes, अभी दिख रहा है.
हाँ जी.
Now nothing in this case, in case of job work, nothing is shall be applied to molds, dies, jigs and fixtures or tools sent out to job worker for job worker. This job work provision will not apply to these items. Input service distributor. Now we will move further to input service distributor. Section 20. Input service distributor means an office of the supply of what. I will first define what is input service distributor in case of GST. Input service distributor means an office of the supplier of goods or services or both, which receives tax invoices toward the receipt of input services and issue a prescribed document for the purpose of distributing the credit of central tax, state tax, IGST or UTGST on the said services to a supplier of taxable goods or services or both having the same PAN. Same PAN is very important. You can transfer the set off in case of input service distributor only when you are having the same PAN as of the said office. Supplier have transferred the goods to ITC, ISD, and ISD have transferred the ITC to branch A, branch B, and branch C. In this scenario, ISD and branch A, B, C all are having the same PAN. Now, how ITC will be distributed? Suppose head offices have received the goods, and the head office and the recipient are in different states. So let's say head office is in Maharashtra and recipient is in Gujarat. So, and head office have received the goods in which supplier has charged him CGST and SGST. Now, what ISD will supply or transfer to his branches? It will transfer to IG. It will transfer IGST. He cannot transfer CGST or SGST because both are in different states. And if both are in same states, then he can transfer CGST or SGST. Suppose it happens that excess credit has been distributed by input service distributor. Then input service distributor have to take back this credit. They have to recover that credit from the recipient along with the interest. And if excess credit have been given, then ISD will also be liable to a general penalty. Now let's move further to accounting entries of GST. First example is Mr. A purchases goods from Mr. B of rupees 1 lakh, tax at 18%. Both Mr. A and Mr. B are from the same state. What accounting entry Mr. A will pass in his books? He will pass the entry as purchase account debit 1 lakh, input tax CGST account debit 9,000, input tax SGST account debit 9,000 to supplier or to Mr. B 1 lakh 18,000. Case 2, Mr. A and Mr. B are in different states. Then what entry Mr. A will pass? He will pass purchase account debit 1 lakh, input tax IGST account debit 18,000 to Mr. B account 1 lakh 18,000. Now Mr. A sells goods to Mr. C of rupees, let's say 50,000, which are taxed at 18%, and Mr. A and Mr. C are in same state. So entry Mr. A will pass in his book is Mr. C or Mr. Debtor account debit 59,000, to sales account 50,000, to output tax CGST for 4,500, to output tax HGST 4,500. If Mr. A and Mr. C are in different state, what entry he will pass? Mr. C account debit 59,000, to sales account 50,000, to output tax IGST account 9,000. Now Mr. A have also purchased furniture from Rocky Furniture of rupees 10,000, which are taxed at 28%. So entry passed in the Mr. A's books will be furniture account debit 10,000, input tax CGST account debit 1,400, input tax SGST account debit 1,400, to Rocky Furniture account 12,800. So the net GST transfer to electronic credit ledger. Now at the end of every month, you have to transfer the output tax and input tax related to that month to electronic credit ledger account. In this case, what amount will be transferred to electronic credit ledger? What entry will be passed? Total input in this case is 18,000 plus 2,800. That is 20,800, and his output liability is 9,000. So net GST input he is getting is 11,800. So at the end of month, in his electronic credit ledger, balance lying will be 11,800. So entry pass will be electronic credit ledger account debit 11,800. Output tax CGST account debit 4,500, output tax HGST account debit 4,500, to input tax CGST account debit 10,400, and input tax HGST account 10,400. So at the end of each month, balance in output tax CGST HGST, input tax CGST HGST account will be 0, and balance will be transferred net off to the electronic credit ledger account. Sometime it may happen that output tax liability has been more than input tax. Then in that case, electronic cash ledger account will be on credit side, and you have to pay that amount through bank and nullify the electronic cash ledger account. Now they have given the methodology to use ITC. How ITC you can use? It has been given in section 49. First, IGST ITC with respect to IGST can be used against liability against IGST first. Then only you can use that IGST ITC for CGST or HGST liability in any order. Suppose, let's say IGST, let me first complete this table, then I will explain to you through example. Then in the books, you cannot use ITC of CGST or HGST unless the ITC of IGST comes to 0. So you have to keep in mind that first you have to use entire IGST ITC, then only you can use the ITC of CGST and HGST. You have to also keep in mind that you have to first nil the IGST liability, then only you can nil the liability of CGST or HGST. Now, second is ITC of CGST. ITC of CGST, first you have to use if there is a liability of IGST, then against IGST liability. If there is no IGST liability, then only you can use ITC of CGST against the liability of CGST. Then ITC of HGST. ITC of HGST can be used first against liability of IGST, then only can be used against liability of HGST. But friends, one thing also you have to keep in mind, ITC of CGST cannot be used for HGST or UTGST liability, and ITC of HGST or UTGST cannot be used for liability of CGST. ITC of C and S can be used for IGST, but they cannot be used for, that means C cannot be used for S and S cannot be used for C. So you have to keep this in mind. Let's explain this with the help of example. IGST, output tax liability, was rupees 2000. CGST, output tax liability, was 500. HGST, output tax liability, was 500. So total liability was 3000. And ITC lying with dealer was in IGST ledger was 2400, CGST 300, HGST 300. So total ITC was 300. So both the liabilities and ITC were same. So how he can use, in which manner he can use the ITC liability, ITC for paying off his liability. First, IGST liability of rupees 2000 has to be paid off entirely from IGST liability first, compulsorily. You have to nil the IGST set off first. Now, in first column, IGST set off has been become 0, but IGST liability has become 0. You are still having ITC of 400 rupees. Now, you have the liability of CGST and HGST of 500 each. So you are having the ITC of IGST 400, CGST 300, HGST 300. But remember, friend, you have to first use the ITC of IGST first. You have to nullify the IGST ITC first. Then only you can use the ITC of CGST or HGST. So IGST set off of 200. You have the choice of using IGST ITC against C or S in any proportion you like. Now in this case, I have used the 400 ITC lying in IGST ledger against the C and S liability, 200 each. So the net liability of both comes out to rupees 300 each. Why I have done so, friends? Suppose in this case, CGST liability was 500. If I use entire IGST liability against CGST 400, then my CGST liability will remain 100. But then I can use that CGST liability to nullify the CGST liability. But what will happen in SGST in that case? My SGST liability was 500, but IGST liability I entirely used for CGST. So I am having SGST set off of rupees only 300. So there comes the balance payment of SGST of rupees 200. Then I have to pay through cash ledger in this scenario. So what I have done? I have done IGST ITC used in same proportion in both the liability. Then in that case, I have no need to pay any liability to cash ledger. And next is debit note or credit note. Firstly, let me explain what is credit note. Credit note is where one or more tax invoice have been issued and the taxable value or tax charged is found to be exceed, or goods supplied are returned by the recipient, or goods supplied are found to be deficient. The registered dealer supplier shall issue one or more credit notes. He can issue one credit note for entire this item, or he can issue one or more credit note also. So he shall declare the details of such a credit note in his return. Here one point is very important. The the details should have been declared in the return, but it should not be later than September month following the end of financial year in which supply was made, or date of furnishing of annual return, whichever is earlier. Let's say you have supplied the goods in year 21-22 and you found that you have to issue some credit note. You issue that credit note in the month of May. Yes, you can issue that credit in the month of May, but you come to know in the month of December 2022, then you cannot issue any credit note. You have to issue different invoice for that transaction. Then debit notes. Debit note is where one or more tax invoice have been issued by the supplier, and after that he found that taxable value or tax charge is found to be less than what should he have been charged. Then he shall issue one or more debit notes. Then he shall also declare the details of such a debit note in that return. Here there is no condition of the month of September, so he can issue debit note anytime because it is the win-win situation for government. So here I have finished debit note, credit note also. Now, Alok sir, Ashish sir.
Yes, sir.
Sir, I have also prepared some material on Rule 42.
Yeah, you
Should
may please share, sir.
Sorry?
You can share, sir.
Okay.
Jay sir, no voice.
Sir, audible now?
Yes, sir, you are audible.
Sir, my screen is visible now?
Yes, it is visible.
Now there is two rules for reversal of ITC, Rule 42, Rule 43. I will be covering on Rule 42 the how to calculate ITC in case of Rule 42. ITC has to be reversed on the supplies that are used for exempt or used for personal consumption. First step. In first step, you have to first segregate the specific credit that are ineligible for the claim from the total ITC as follows. Now they have in rules they have mentioned some abbreviations like for T. T is total ITC on inputs and input services in a tax period. T1, out of T, the specific credit attributable to inputs or input services intended to be used for non-business purposes. What is T2? T2 is the amount of ITC attributable to inputs or input services intended to be used exclusively for effecting exempt supplies. T3, out of T, the amount of input tax deemed as block credit under section 17(5). So in this, from total ITC, you have to reduce T1, that is ITC used for non-business purpose, T2, ITC used for exempt supplies, and T3, block credit. So from T, you reduce T1, T2, and T3. So you will get the common credit that will be termed as C1. C1 is common credit. It means common credit which is used for exempt supplies also and taxable supplies also. What is T4? T4 is specific credit on inputs or input services attributable exclusively for making taxable supplies. This would also include zero-rated supplies like exports and supplies to SEZ. Means ITC which is exclusively used for making taxable supplies. So for common credit, you have to reduce that also. So you will get C2. Now compute the amount of ITC to be reversed out of the common credit. Now out of common credit, you have to reduce the ITC, you have to reverse the ITC which is used both for taxable as well as exempt supplies. Now how to calculate that? First you have to mention E. E is aggregate value of exempt supplies during that tax period. F, F is total turnover in the state of the registered person during that tax period. Means you will get exempt supply and total supply of that dealer in that particular tax period. D1. D1 is the ITC attributable towards exempt supplies out of common credit. How to calculate that? The formula is given E divided by F into C2. Then you will get D1, and D2 is deemed to be the ITC attributable for non-business purpose. That is, they have mentioned fixed percentage, 5% of C2. Now, remaining eligible ITC out of common credit is C2 minus D1 minus D2. Based on the above calculation, D1 and D2 will be the ITC that needs to be reversed. Now, let me explain this using the example. Total ITC available what with dealer was, let's say, 5 lakh rupees. ITC used for personal purpose T1 was 25,000. ITC used exclusively for making exempt supplies T2 is 50,000. Block credit was 15,000. And ITC on inputs used exclusively for taxable supply is 3 lakh. The aggregate value of exempt supplies made in the month was 4 lakh, and total turnover for the month was in that state was 40 lakhs rupees. Now, how to calculate common credit? Let's first find out C1. C1 is equal to 5 lakh minus 25,000. 25,000 was ITC used for personal purpose, 50,000 for making exempt supplies, and 15,000 was block credit. So the credit comes out to be 4,10,000. Now, out of that common credit, we have to find out. Common credit is C1 minus T4. C1 is 4,10,000 minus 3 lakh. 3 lakh is the ITC which we use exclusively for business purpose. So the common credit comes out to be 1,10,000. And D1. D1 is what? D1 is E divided by F into C2. That is, D1 is equal to 4 lakh divided by 40 lakh into 1,10,000. That comes to be 11,000. And D2 is 5% of C2. That is 1,10,000 into 5%. That is 5,500. So what two things you are going to reverse? 11,000, that is common credit, and 5,500. So in total, out of total ITC of 5 lakhs, only C3 93,500 and 3 lakh were eligible credit, and the remaining 11,000, 5,500 were required to be reversed. So here I have covered my entire presentation which was expected. So in case of any questions, we can take Alok sir, Ashish sir.
And now may I request Ashish to please take up the questions, or any Abhishek ji for taking up the questions.
Okay. So we have a few questions from the participants. So I'm reading out the question. I am issue purchase return invoice, that is debit notes to X party. This invoice uploaded in GSTR1 where party X issue credit note and uploaded GSTR1. This invoice show in GSTR2 how to adjust input tax credit problem. So I suppose Rishabh from Patna, the query is not clear, right? Okay. So what would I extend what Jayesh has added already? Rishabh, please have a note of it. Jayesh, I will give you to answer, but I'll just discuss on the query first.
Yes, yes.
Yeah. So Rishabh, please have a note of it that firstly, the credit note or a debit note as per section 34 can only be issued by the supplier, right? So if, let's say, Abhishek is selling goods to Rishabh, then Abhishek is the supplier, Keshav is the recipient. Now, if goods are returned back to Abhishek, Abhishek can only issue a credit note or a debit note.
Yes.
For giving you brief, let's say if I give you a sale invoice, you pass a purchase entry. So if I give you a credit note, you pass a debit journal. If I give you a debit note, you pass a credit journal, right? So whatsoever I give you, you don't issue an alternative document to me ever. Second, what I got the query is that you want to see the adjustment of the input tax credit on issuance of the credit note or debit note, right? Jayesh, over to you to answer the query.
Sir, you are exactly correct. The debit note, the right of issuing debit note and credit note has been given to only supplier. Only he can issue. In this question, what from Mr. Rishabh have asked, he says that suppose Jayesh have sold the goods to Rishabh, and Jayesh found that after some time that he have less charged the tax or less charged the taxable value. Then he further issues debit note. Then why Mr. Rishabh wants to issue credit note? The credit note is like only that he in his books he only accounted for as a credit note, because what I am giving as debit note, it will be a credit note in the books of in account for Mr. Rishabh. So he need not mention it in GSTR 1. Only the seller party will issue it to give it in GSTR 1.
Perfect. So Rishabh, I suppose you got the answer, right? So in any case, the supplier issue a credit note, the recipient will reverse the credit, right? Pehle case mein, when the supplier give the invoice of 100 rupees, the recipient take the entire credit of 100 rupees. Subsequently, when the receiver give a credit note on goods return of 10 rupees, say, then the recipient will reverse the credit of rupees 10, right? वो ITC ले लेगा 100 रुपए का, ITC रिवर्सल करेगा 10 रुपए का, right, Rishabh? Second
there
question.
is one condition in credit notes that ITC has to be reversed by recipient. If there is no ITC lying in credit ledger, he have to pay it through DRC 03.
Yes. So can we move to second question?
Yes.
So second question is from Kochi, Mr. Subramani Iyer. The question is, job worker goods supplied not returned after expiry of the period, whether it will be deemed as sale and principal supplier has to pay GST or not?
Yes.
So Subramani, you got the answer. That
in case of job work, if the inputs have not returned back in 1 year, then it will be deemed as supply. And if capital goods are not returned back in 3 years, then it will be treated as deemed supply. And in the case of, let me first, just a minute, one form job worker have to regularly file 04A. Yes. You have to file ITC 04, and there is a two types of dealer who needs to file. Suppose his turnover is less than 5 crore rupees, he have to file 6 monthly, and if the turnover is less than 6 monthly, he have to file annually, and if the turnover is more than 5 crore, he have to file 6 monthly, in which he have to give all the details of goods sent to job worker and goods returned back from job worker.
Perfect. So I have listed down few questions. I'm not getting much more question from the audience. I have listed down a few questions. So I will throw one by one, and we can give more knowledge to the audience. So the eligibility of taking ITC. So who can take ITC? Is it a registered person or any person?
Section 16(1) in the start only says that ITC can be claimed by, it starts with the word registered person. So only registered person can claim the ITC. If you are not registered, you are not eligible to claim any ITC.
Perfect, sir. So friends, this point is to be noted. Unlike other sections, for example, section 54 starts with any person, right? But section 16 starts with registered person. So if you in any case want to claim ITC, you have to ensure that you are registered under GST Act. So when you move further, you will see there might be scenarios where your GST number might be suspended or cancelled for a while. Please note, you might not be allowed to get ITC of the period for which you are suspended or your GST number is cancelled. Jayesh, any point of view on that?
No, sir.
Perfect. To avail the ITC, registered person must pay the supplier the value of the goods or services along with within 180 days, right? So the query is, if he is not paying by 180 days, then what is the law?
Then he have to reverse that ITC and pay interest from the first date on which he claimed that ITC. Let's say, suppose he purchased the good in the month of April 2022 and the 180 days expire at the end of September, 30th September. Then he does not pay the amount. Then he have to reverse the ITC which he have claimed in the month of April in the month of September. That he is going to file the return in the September return he will be filing in October. Then he have to reverse that ITC and pay the interest from the month of April. Suppose he pay partial, he have paid partial amount. Suppose the goods was rupees 1 lakh plus GST 18,000, 1 lakh 18,000, and he have paid 59,000. Then he have to reverse 50% of his ITC because he have paid 50% of amount.
Okay.
And when interest to be paid from the month in which he have taken the ITC.
Okay. So I'll put this way, as I'm agreeing with the Jayesh, whatever Jayesh has mentioned. So I will just put this way. So let's say I have purchased something and I have not paid my supplier for 180 days, and I have paid my supplier in 270 days. 1 तारीख को मैंने माल खरीद लिया, मैंने 270 days तक पेमेंट नहीं किया, and I have paid the entire amount on 271st day. I am liable, number one, I am liable to reverse the credit on 180 day. Since I have now paid the supplier, I am liable to pay interest. Rule 37, sub rule 4 specifically mentions that I am liable to pay interest from the date of the invoice, from the date on which I have taken the credit, right? So this is important, friends, right? This is to be taken when you see practically, when you go for audits, please have a note on the aging, right? Ab invoice wise aging ko dekho ki how many days it has not been paid. So I will just give a more comparison as compared to previous law. This provision was copied from service tax law. In service tax law, there was a 90 days clause. Please understand, it was said in service tax, if you are not paying within 90 days, you are liable to reverse the credit. In GST law, the word used has been fails to pay, right? Fails to pay. Now, it's a different interpretation that, sir, what if you are having a written agreement? Let's say Abhishek and Jayesh are having a written agreement that Jayesh will supply services to Abhishek and Abhishek will pay only to Jayesh after completion of 365 days. 1st April 2022, Jayesh given the service to Abhishek, invoice raised. Abhishek has a written contract that I will use your service for 365 days and I will pay you on 1st April 2023. If there is a consented agreement, and in this scenario also Abhishek have not paid Jayesh within 180 days. So as per law, prima facie, yes, Abhishek is liable to reverse the credit. If so, Abhishek pays in some time later, Abhishek is also liable to pay the interest. But friends, now please understand, you guys also are going to be professionals. You have to respect what law is saying. You have to respect what there is something between the lines. The word in the law is fails to pay. My question as a food for thought is, had Abhishek ever failed to pay? The question whether Abhishek failed to pay or not will only arise when the situation as per the contract comes to the picture. The contract says 365 days में payment करना. On the 365th day, if I fail to pay, then I actually fail to pay, right? So this is an interpretation. This is a parallel interpretation in this industry, that if both the parties having consent, then failing to pay is never coming to picture. If failing to pay is never coming to picture, then this reversal does not arise altogether. But that is only a interpretation, right? In your exams, in your examinations, I'm sure it will be that if it is crossing 180 days, you are liable to reverse the credit with interest. Friends, please appreciate, I am giving you the thought process in which you will need to develop, right? When you go more ahead in your career, you have to develop that thought process also, right? Okay, we have one question. Invoice issued but goods not dispatched. It appears in GSTR in 2B. This question from Mr. Dalip from Noida. Invoice issued but goods not dispatched. It appears in GSTR 2B. That's it. So I believe Mr. Dalip wants to have an idea that what if supplier issue an invoice, recipient can see the invoice in GSTR 2B, but the goods has not been yet dispatched from the supplier house to the recipient house. So question would have been whether the receiver would get the credit or not. Jayesh?
No, since he have not in receipt of goods, it's a basic condition in section 16 that he should have been receipt of goods. So he cannot get the credit. Like in the case of also lots or installment, unless he get the last lot or last installment, he cannot claim the credit of, even though supplier have paid the tax on that transaction.
Perfect. So 16 subsection 2 condition says 4 condition mandate, 5 condition rather mandate. One of the condition is that you have to receive the goods or service. If you have not received the goods, you cannot take the ITC irrespective it is coming in your GSTR 2A or 2B. Okay. If any supply of any period is skipped or not taken in GSTR 3B of the relevant period, then how such supply can be included in subsequent period in GSTR 3B?
Can you repeat the question?
If any supply of any period is skipped or not taken in GSTR 3B of the relevant period, then how such supply can be included in subsequent period in GSTR 3B?
So I'm not getting what you are.
Okay. So the question is, if some person is misreporting a transaction in a GSTR 3B,
okay,
then how can he report the said transaction in subsequent 3B?
Sir, suppose what I am understanding is, suppose in the year 21-22, the total transaction was of rupees 2 crore rupees, and the dealer have shown in his 3B is of rupees 1 crore 80 lakhs rupees. So he missed the transaction of 20 lakhs. That is what the question is, Abhishek sir?
Yes.
There are two ways. Either he can file the DRC 03 and report it in GSTR 1 from the subsequent month that the transaction which was missed. Then he can also show in the GSTR 3B of next 6 months. Like both the options he can go for.
Perfect, Jayesh. So this question was from Mr. Kastub, Ms. Kastub from Nagpur. So, ma'am, you got the answer that if it is not shown in the current GSTR 3B, then as per circular issued in December 17, right? It was clearly said in para 4 that if an invoice or anything is missed or omitted, then modifications can be done in subsequent returns, right? What is recommended from my side is that you can definitely go and modify or take consider the transaction in the subsequent GSTR 3B, but do it only when it is of the same financial year. If it is of a next subsequent financial year altogether, then please go and pay through DRC 03. Why I'm saying it so? Because please have a note, there are lots of cross informations flowing up. Whatsoever transactions you are showing in GSTR 3B will also be available in your GSTR 2A. So, for example, in the financial year 1920, you have disclosed a 3B of 1 crore 80 lakh rupees. 20 lakh is skipped from you. Now you come to know in the next financial year. Now, if you add that 20 lakh in financial year 2021, your 26 AS of financial year 2021 will show additional 20 lakh rupees. You have to continue the reconciliation. It is better you pay that 20 lakh rupees through GST through DRC 03, right? In that, you can always select the financial year. Perfect. We'll go into the next question. Okay. Mr. A registered in January 2022. So is it mandatory to file GSTR 9? This question is from Aman from Bareilly. Jayashar, you want to answer this?
Sir, first of all, if his turnover crosses 2 crore rupees, then it is compulsion on him to file GSTR 9, even though he is registered for 3 months in that financial year. But if his turnover doesn't cross 2 crore, it is not compulsion on him to file GSTR 9. But I will suggest what the practice we follow. We follow that we file the GSTR 9 for each and every dealer, so that our books turnover and GSTR 9 turnover gets match. Even if the case selected for scrutiny, it is better for us to represent before the officer that we have filed GSTR 9 and we have claimed that ITC which was left to be claimed in previous year, we have claimed in next 6 months. These things happen. So it's better to go for GSTR 9. But what Act suggests right now is only if you have turnover about 2 crore, even though you are registered for 3 months, you have to file. Otherwise, no need to file.
Perfect. So, Aman, you got the answer. I will just add a practical instance what happened with us. A client came on 23rd of March. He wanted the GST registration to be done. That time, GST registration had been coming in 3 to 4 days. आज बहुत टाइम लगता है, but 3-4 दिन में उस टाइम GST registration आ गया था हमारा. So the GST registration came on 27th or 28th, as far as I remember. He issued an invoice of 7 crore rupees on 29th of March 2021, I suppose, or 2020. Friends, please note, he just got registered on 23rd March. Since his turnover exceeded the limit, he was liable to do all the compliances of annual return and 9C, GST 9 and GST 9C, right? So I am sure that you have got the clear instructions on that. Okay. If block ITC as per section 17, then how to reverse ITC? Okay. This question is from Mr. Rishabh from Patna. He again want to understand that if ITC block is there as per section 17, then how to reverse it in GSTR 3B? He want to have an idea how to reverse it in GSTR 3B.
So in GSTR 3B form, there are ITC reversal column is given, ITC which has to be reversed as per rule 42, 43, and ITC which we have to be reversed as per rules as per section 17.5. If suppose he have to reverse ITC for 21-22 and he have to do it before September 22, then he can do that. But I will suggest, if ITC reversal is of for 21-22 and he have filed all the 3B for 21-22, then better to do it reversal using DRC 03. Do not disturb in next year, because he have to keep in record separate reconciliation statement for that. So if you are reversing it in next financial year, better to do it using DRC 03. And if you are doing it in same financial year, do it through GSTR 3B reversal column. You can put it that amount.
Perfect. Just I'm just trying to show something. Right. So not just hold on, Jasha. I will just try to add something which might be useful for them.
Yes, sir. Sure.
It's not coming. I'm just trying to locate a soft copy of GSTR 3B where I can show them the entire exact the form. Let me download it straight away. Okay, so I'm just sharing my screen. Is my screen visible?
Yes, Abhishek ji.
Yeah. So this is I've just Googled the same. The GST Gen is a.
Can you zoom in?
Yeah, I'll do. You have to switch, I suppose. Is it perfect?
Still you have to zoom in, sir.
So I have shared the full screen. Alok sir, can you confirm whether my screen is properly visible or not?
Yeah, it is absolutely fine. And if possible, you can also zoom in by using these three dots which are coming on the upper right.
Now much better.
Okay, yes, from here.
Okay, perfect. I will do so. So please, friends, understand, I'm not going to discuss, I will discuss whether if the time permits the entire form once again with you, but I will just answer question of Mr. Rishabh from Patna that how to reverse the credit. So for reversing the credit, we ideally have two options. Please pay attention. This is very important and might be very useful for you. Let's say my total ITC is 500 rupees. Okay. And from that 500 rupees, I can easily see that 100 rupees ITC pertains to a car. I have bought a Mercedes Benz. The Mercedes Benz ITC is 100 rupees, right? So out of 500 rupees, 100 rupees ITC is pertaining to my car, right? As Jayesh properly made us understand that any motor vehicle below 13-seater is block credit. राइट तो 100 रुपीज की आईटीसी हमें नहीं मिलेगी तो वी आर ओनली एलिजिबल टू अवेल 400 रुपीज आईटीसी ऑप्शन 1 we will go to the table and in this table we will write in 5 let's say it is normal purchase so in the 4 in table 4 after the subheading capital A in serial number 5, all the ITC, we will write 500 rupees. Let's say 500 rupees. And then we reverse 100 rupees in heading capital B, serial number 2, others. We reverse 100 rupees here, right? So my point is we write 500 rupees in all other ITC column, row, and we write 100 rupees in others in ITC reversed. So net ITC will be 400 rupees. Option 2, we ignore the entire 100 rupees and we straight away write 100 rupees in all other ITC and then we don't show the reversal. Students, please keep a note. Whatsoever is coming in your GSTR 2B is getting auto-populated in your GSTR 3B. That is modifiable. आप उसको modify कर सकते हो. You can edit the same. So let's say in 2B it is coming 5 lakh rupees. In all other ITC, it will automatically come 5 lakh rupees. You can always go and edit. You can keep it 5 lakh rupees, and in serial number B, you can always go and say 1 lakh rupees pertains to car, so I'm reversing the same, right? So I try and give the fair idea that how to reverse the credit, as the question was raised by Mr. Rishabh. Okay. We got a very good question from Vineet Rai. He's from Bhopal. In case of construction of residential house, after taking CC, that is completion certificate, GST not applicable on that house. Input goods and service used for construction above house, take ITC, whether reverse the above ITC related to the above house. So what was the drafting is this? Vineet, what I can understand your question is that if you are selling the property after completion certificate, since it becomes an exempt supply, are you eligible to claim the ITC or not of goods and service? I believe this is your question. Jayesh bhai, over to you.
Sir, first of all, ITC related to goods and services works contract. He is doing the construction services. If he claims the ITC, let's say he claims the ITC, but if by mistake he uses for another business purpose or another purpose he uses that ITC, then it will be a interest he have to pay on that whatever he have used, because his intention is very clear. He have to claim that ITC and he have to reverse that ITC afterwards. But it should have been clear from his credit ledger. He should have, if assessment continues, then he should have been able to prove the ITC which he have taken, he have not used it for any purpose, any other purpose. Then only it will be okay. Otherwise, he have to pay that reversal along with interest.
Perfect. So, Vinitji, what I would like to add on is you are restricted to claim ITC if you are making any supply which is exempted under the law. Section 17 subsection 2 is the mother provision which says that you cannot claim credit if your outward supply is exempted. So in this, if before CC, if you collect even a single rupee, the entire supply is taxable. Then if the entire consideration is received after CC, then the entire supply is exempted. If the entire supply is exempted, then all the ITC regarding input service, capital goods falls to be is liable to be getting reversed. Now, as per after the modification, the law in 1st April 2019, if you opt for a 5% scheme, then you, as per the provision, you are not allowed to take any credit, right? And please again note, the law says this, we are only required to know as a student this only, but when you think and talk as a professional, you also have to read all the notifications, all the rules, all the circulars, and to an extent, case laws, right? Currently, there is a judgment of Honorable Madurai Bench, Safari Retreats. It's a Odisha High Court judgment. Sorry, no, it's not Madurai Bench. It's Odisha High Court judgment. And it says that you can take the credit. You can take the credit even of the immovable property. The same judgment was passed in favor of the SSE by the Honorable High Court, has been challenged by the Revenue in Supreme Court. SLP has been filed. The decision is still pending from the Supreme Court. But again, that is only for your information that the question has been asked why we cannot take the credit since it is used in the course of furtherance of business. I will just throw some more light. In that scenario, the SSE was building a shopping mall
mall, shopping
all the
complex.
showrooms of the shopping mall were to be let out. So when I am charging rent, I will be levying GST. He was asking, when I am charging GST and I am paying the GST, why I cannot get the benefit of the input tax credit, which I have accumulated by purchasing cement, by purchasing sand, by purchasing the raw materials to build the shopping mall, right? So again, micro down to your answer, you are not allowed to take the credit.
But considering academical view from the
Yes.
student's angle, better not to take credit.
Yes, you're not taking the credit. Okay, so this is gone. Kindly explain the electronic credit ledger system. This question is from Khadim from Jamshedpur. Sir, he wants to have an idea of the electronic credit ledger system.
So what exactly electronic credit ledger means? I have already mentioned कि use of IGST can be used against IGST liability first, then C or HGST. Like that only you can use. And in case of CGST liability, you have to first use IGST ITC, then CGST ITC. And in case of HGST liability, you have to first use IGST set off, then HGST set off. And electronic credit ledger will give the balance at the end of every month, whatever lying in CGST, HGST, and IGST credit ledger.
So
it will also mention cess in that.
Perfect. So I believe, Jayesh, let's give an idea of the electronic credit ledger as a whole also. Friends, please note, Jayesh, can you log in of some ID? I'm not getting login credentials of my clients currently. Can you log in for some ID? I will show them the entire dashboard. If possible, please try. Okay, so I will just add more points to this. Friends, please understand there are three types of ledgers. One is liability ledger, one is cash ledger, one is credit ledger. So for talking about credit ledger, electronic credit ledger is a ledger in which whatsoever ITC, input tax credit, you availed from GSTR 3B can be shown there, can be seen there. It is merely a bank passbook. It is merely a bank passbook having all the transactions of your input tax credit, right? जो भी आप whatsoever ITC you avail from GSTR 3B, wherever you pay, use ITC. Wherever you pay ITC in DRC 03 annual in your subsequent returns, you can always use. You can always see in the credit ledger, electronic credit ledger. Okay. Can we get the notes? Definitely, sir, you will get the notes, I'm sure. But later on, supplier reversal issue credit note reduces. Plus, the buyer is a position loss amount when reverse ITC construction work by real development. Sir, one of my friend is having a nursery business and I recently did GST registration for him. Okay. He's using his personal car for his business and he wants to claim ITC on fuel used for vehicle. Is it possible?
No.
My dear friend, there is no GST on petrol yet in India. Huh? So please don't do that. He's Sundra from Bangalore. And Sundra, if you're in Bangalore, there are much more issues we can discuss, right? There's EV car coming, electronic car coming. A lot of dispute is having on the charging of the electric cars. So you can have more fight on that. To answer your question, if the nursery business is fully exempted, you cannot even take a credit. 1, 2, if let's say you are in a business which is taxable in nature, then also you cannot take the credit of a car. And what Jayesh rightly mentioned in his deliberation, credit is not available in relation to the car, repairing of car, insurance of car, everything, right? In short, you cannot get the credit, my friend. Okay. Next, I will go and throw a question. Yeah. ITC on vehicles less than 13-seater is blocked. Will ITC on buses will be allowed to a company for transportation of its employees from a point to the factory? My question is, if I purchase a bus for movement of my employees from a common point to the factory and return them back, will ITC will be allowed? Had a food of thought, right? Number one, it is having capacity of more than 13 passengers. Number two, it is in the course of furtherance of my business. So I'll just answer this. ITC is allowed, right? ITC on the bus is allowed. Jesha, are you looking for the login credentials? आप लॉगिन क्रेडेंशियल देख रहे हैं क्या? कोई है क्या आपके पास? जीएसटी लॉगिन क्रेडेंशियल्स है क्या अपने पास कोई भी?
सर वही कर रहा हूँ मैं, लॉगिन कर रहा हूँ साइड में.
अच्छा कर रहे हैं ना, देखिए
आप तब तक कैरी ऑन करिए.
ओके, दिस इज हो गया. ओके, ओके, okay, full stipulation of the first. Perfect. So just allow me to go back here. This is done. This is done. Perfect. So not much questions are there. I will just try and figure out something from my side. Friends, what I will try and show you more by the time JSL is arranging a login credentials. So by that time, I will show you something in the GST portal. My screen is visible. My screen is visible. Jesh bhai?
Yes.
Okay. So friends, you can see this. This is a dashboard which, if I log in gst.gov.in, this will the page it will open, right? So the moment we get a login credentials, we will just put our login credentials here, and we can always see. Without even login, we can have few good things from this site without even login, right? So if you see the due dates are there, if you see things are or GST knowledge portal are there, I will show you a very interesting thing, right? I'm sure many of you have already noticed, but I will show you from my end if someone not noticed. This is free accounting and billing service. GSTN has chosen few GSPs who are giving you a good basic softwares, right, with the possible features. So if you see, these are the list of the softwares which is already available. You can simply download it. We can also see which are cloud based, which are desktop based, which are also available in the mobile applications. So this you can always explore, and these are the free softwares available. Majority of them are registered GSP with the GSTN. Next, I will show you.
Sir, I have done with login credentials.
Okay. Yes, sir. I will be just back to you. Just give me 1 more minute. I will.
You complete, then I will.
I will just, yeah. So let's say if I give you my PAN number or my name or my GST number, and you want to have a basic details of me, how will you do that? You can always go to search taxpayer, right? Friends, as a youngster, whatever we get, we want to explore, right? explore this site. Whatever information, whatever learning you are having in this series, please explore from your end. You will get the essence, right? So you can see search taxpayer by GSTIN, by PAN, by temporary ID number, whatsoever, right? Entire GST law can be read from here, right? All the things a person not having a GST registration number can also do the payment. A person not having GST number can also do the payment, right? Okay, so now I will just hand over to Jayesh to show the dashboard. After how it seems when you log in with the dashboard. Jayesh.
Yes. Sir, is it visible?
Yes, sir. Perfectly visible.
Now,
okay. So friends, this is a client of Gesture through which we can see electronic credit ledger. So you can see the three ledgers, what we mentioned: liability ledger, cash ledger, and credit ledger. The liability ledger is a ledger which shows the entire liabilities. Let's say the liability could be 100 rupees. You have set off the entire liability of 100 rupees either through credit ledger, ITC, or cash. But that set off can be easily seen in the liability ledger. Similarly, the cash ledger, whatever amount you deposit is in cash ledger, and whatever ITC you avail is in the electronic credit ledger, right? Jeshwar, do you mind if you show the credit ledger once?
Yes. We can open the credit ledger not more than for 90 days.
Perfect. So, friends, you can see all the transactions date-wise can be seen in the credit ledger.
Now, when I filed the return for the month of December 21 on 3B on 15th of January, I took the credit of CGST 1,43,000 or amount, SGST same amount, and sales of 15,147. So, and on the same date in 3B, I have filed I have shown the sales liability which was of rupees 1,31,102 and SGST and CGST same. So at the end, this balance amount, in this balance amount, there was an opening balance of 1,33,370 in CGST. Then I added the ITC of 1,43,397, which comes to 2,76,000. Then I paid off my liability out of this credit ledger of rupees 1,31,102, and net balance comes out to like 1,45,665. So rightly mentioned by Abhishek sir, it is like a bank passbook in which when you are having opening balance, you deposit cash or you deposit any check or any RTGS comes to your account, the balance get increased, and if you pay off to some person, that balance get reduced. So this is like the same only.
Perfect.
And it has been written debit or credit. Debit means you have paid off your liability. Credit means you have taken ITC.
Perfect.
I think credit ledger में इतना ही है, और कुछ any query from credit ledger can ask right now.
Okay. So we have two questions. Invoices amended by the supplier after September 21, can we claim ITC? So this is
I think after September, suppose for let's the case is for 21-22. Now it has been changed. Date has been changed to November. And if someone is amending, I think after November, system does not allow to amend.
Exactly. So it is not permitted from there and to our knowledge. So nothing can be done. And you cannot claim ITC as per section 16, subsection 4 after November of the subsequent financial year.
Yes, you cannot claim that ITC. Even though the system allows, you cannot claim the amended ITC. What you have already claimed, that only you are restricted to claim.
So Mansi Solanki has asked from Gujarat a question. Sir, if I delete my GST number, what will be the consequence? Mansi, this is not your Facebook account which you can delete. It is a GST number which you have to apply. Once you apply, you get the GST number. It can be suspended or cancelled. Voluntarily from your end, the application can be made, or from the government side, it can be suspended or cancelled. If the GST number is suspended or cancelled, then sir, do not log in. We can discuss much more later. We'll discuss the returns. Do not log out from the. It will be a good thing. So Mansi, coming back to you, you can always if in case the GST number is suspended or cancelled, then you are not allowed to make taxable. You cannot collect taxes in the name of GST, and you're not allowed to take ITC. As Jayesh mentioned, a registered person can only take the ITC. Okay, suppose Mr. A buy goods or services at ₹100 and he sells the same at ₹90.16 due to some change in the market scenario, that is competition and all that stuff. Can he avail ITC of 100%? अच्छा, what his question is भाई, that 100 में 100 रुपीज में माल खरीद लिया मैंने, 80 में बेच दिया, तो can I take the credit of 100 rupees, or do my also ITC come down to 80 rupees?
Yes, you can take the entire ITC.
Yes. So this is unlike to the VAT laws, specifically in West Bengal and Karnataka, where we were dealing before GST. What I would suggest you is, in the earlier regime, it was said that if you're selling below your cost price, you are restricted to take the credit to the selling price. But in GST, there is no such concept. In GST, if you are eligible to take the credit, please take the credit. In GST, there is something called valuation and valuation rules. In that determine the transaction value, right? So in your question, if you are purchasing at 100 and for any scenario, if you are selling at 80, you can still take the credit of entirely on 100 rupees, right? Gunjan Kumar Jaiswalji from Bihar, Simrahi Bazar, Bihar, right? I answered your query. Okay, so Jaishal, we have more 20 minutes. Can we show them GSTR 3B form? So yes, they will have a better idea of GSTR 3B form.
Should I open from login?
Yeah. Whatever you want, you can show them the login also, the dashboard.
Or give me some time, I will open and start sharing the screen. Sir, I have opened form 3B. Now I will start sharing the screen.
Please.
Should I directly open 3B or I have to show from start?
We'll just give an idea. So GST 1 will be a bit clumsy for people who don't know it. So just will give a, if you can open just 3B, right?
Open one file 3B in that.
In fact, Jeshbhai, you can download it. So they will be understanding more clearly.
Okay.
They will have a fair idea. Back budget just. Yes, download file. Friends, we must appreciate what Jayeshbhai is taking efforts. Is going forward and sharing everything. Please note this is only for the purpose of academics. It's a disclaimer that we are not showing figures or we are not putting the name of the client for our things, right? This is only for the purpose of academic, and please take it in that spirit only.
No, sir. I will read the entire section of this Form 3B.
Yeah.
First is year, period, then GST number of the dealer, his name, trade name.
It is not visible, Jesh, right?
No.
It is not visible. It is, you just stop share screen, and then again start the share. Yeah.
Now it's visible?
Yeah, it is not visible. So friend, this is a PDF of file of the filed GSTR 3B, right? So you will have a fair idea. Jesha, please go ahead.
Yes. In first section, there is details about the dealer. Then for point 3.1, details of output supplies and inward supplies liable to reverse charge. In first point, there is outward taxable supplies. You have to mention here all the taxable supplies other than zero rated, nil rated, and exempted. Then second is zero rated supply. If you have to mention in point B. In point C, you have to mention nil rated or exempted supply if any. And D, inward supplies liable to reverse charge. Like if you are taken a transporter services, then you have to pay RCM on that service. Or if you have taken any advocate services on which you have to pay tax on RCM basis, that have to be shown in point D. And point E is non-GST outward supplies. So all this point 3 will cover outward supplies and inward supplies on which reverse charge is payable. Then 3.2, out of supplies made in 3.1, details of interstate supplies. Suppose you have made interstate supplies to unregistered person, then you have to mention it in 3.2 table 1. That is about 2.5 lakh rupees transactions you have to mention. Then supplies made to composition taxable person you have to mention here, and supplies made to UIN holders have to mention here. Then next is eligible ITC. 4.4a, ITC available on import of goods, ITC available on import of services, ITC available on inward supplies liable to reverse charge other than 1 and 2 above. Means what you have paid in reverse charge in table number 3, 3D, inward supplies liable to reverse charge. You have, if you are taking that ITC in the same month, then you can show it in 4.3, inward supplies liable to reverse charge. The next is inward supplies from ISD, input service distributor. Then all other remaining ITC. That comes to total ITC available. Then the point comes ITC reversed. ITC reversed. First is as per rule 42-43, what you are reversing you have to show over here. Then other ITC reversal other than 42-43 you have to show over here. Then net ITC available will come. After that, ineligible ITC you have to reverse. As per section 17.5 you have to reverse over here, and others. So the total ITC eligible will come. Then table number 5, it will show value of exempt, nil rated, and non-GST inward supplies. That you have to mention over here. Then if any interest and late fee is there, you have to mention in this table number 5. Then if in table number 6, if you are paying through credit ledger, then it will be tax paid through ITC. If you are paying through cash ledger, it will be tax paid in cash. If you are paying interest, then interest will be paid in cash. friends, keep in mind, any interest and any GST late fee, it has to be compulsorily be paid through cash ledger only. You cannot use credit ledger for payment of interest or for payment of late fees. Then reverse charge. Reverse charge liability has to be also paid through cash ledger only. You cannot pay RCM through credit ledger. RCM has to be paid through cash ledger only. So here comes breakup of liability declared for the month of March, and after that you have to confirm and file, then submit and then file using OTP.
Perfect. So friends, I believe this will give a fair idea how GSTR 3B looks like after getting filed, right? The entire intent was to give you an see, you will only understand when you do it yourself, right? When you're in the principal's office, if you get an opportunity to file the compliances, then only you will get the entire understanding. One question we can take now. We have 10 minutes.
Yes, I have no issues.
Right. So Surendra ji from Mumbai has raised this. Earlier, we can take provisional basis ITC like 105%. I note case all supplier has updated GSTR 2B, and after that it is appeared that I have taken excess credit. What is the solution? Well, what he want to say is he has seen GSTR 2B 100 rupees. He took 105. Tomorrow he saw that it is still 100 rupees only. There is no increment. So he has taken 5 rupees excess. So, Jasher, over to you.
Sir, in that case, suppose it is the case of December, let's say December 21, someone has filed his GSTR 1 and it has reflected in 2B of his. So it comes to 100 rupees and he have taken 105. Now, the supplier has amended this December transaction, let's say in the month of February. So it will be reflected in February 2B. Suppose February liability is 150 rupees, his liability, and whatever he has amended was rupees 75. So net ITC was 75 only. So in February 22, he can claim the ITC of 75 only, which already got the effect of amendment of December transaction.
Right. So Suinderji, I will just add on what Jayesh said, a couple of points more. One point is, today there is no 105% bracket. From 1st January 2022, 16(2) AA got inserted. It said whatsoever amount you are getting in GSTR 2B, ideally you are eligible only for that. 1. 2. If in any case you examine that you have taken excess credit, it is simply that you have to reverse the credit, right? Once you reverse the credit, if you reverse the credit by using your electronic credit ledger, and that, let's say you reverse 50 rupees, and that 50 rupees is consistent from the date you availed till the date you reversed, you are not liable to pay interest under section 50 subsection 1. If you have utilized the same credit and you are paying it through cash ledger, then please have a note that you are liable to pay interest as per section 50 subsection 1, that is 18% per annum basis, right? 18% per annum basis. That's it, sir.
Yes.
Okay, so we have done the question part. Alok sir, anything to add further? You want us to summarize? Or
That's all okay, sir. I think so. I will request all the students, if still we have about 5 minutes, if you have any question, then please post it on the query screen so that it can be taken up.
Okay, we have a question from Nandini ji Agra. Is GST exempted on chilling of milk? Chilling of milk, as milk is an agricultural produce. Jayesh, over to you.
Her question is whether
दूध को ठंडा करने वाला काम क्या GST exempted है?
Sir, whatever you are further adding to any product, agriculture product or natural product which you are getting, they have specifically mentioned that only that if product, suppose you are getting any product from farm produce and you are selling as it is in the market, then there is exemption. But if you are doing some polishing or some extra work on it so that its quality gets improved, or its nomenclature, or its whatever it's like, its form changes, then there is no exemption, I think.
Okay, so I will add on to this.
If particularly mentioned for that service, that chilling activities, if particularly mentioned it is exempt, then only you can say that it is exempt. But you cannot add it in a particular, like whatever agriculture produce you are getting is exempt in the market.
Perfect, sir. Perfect. So I will just simply add to this. Please, friends, note that whatsoever exemption comes through the law. Section 11 of the law empowers the power to exempt. For services, there's a notification 12/17, and for goods, the notification 2/17. In your entire career, whosoever says that this goods or service is exempted or not, please log in, please search yourself in the notification, right? To answer this question specifically, I will just share one thing. Let's say warehousing of the agriculture produce is exempted, right? Chilling of agriculture produce while warehousing is also exempted, right? Let's say if a perishable commodity is to be stored in an area where the AC temperature should be controlled. So in one of the client is having a warehouse whose entire plant and machinery was installed by Godrej. It was an open refrigerator in which the temperature was reduced to 5 or 4 degrees, right? It was a milk goods and everything like that. The non-veg industries, the chicken and the things are stored in a fashion which increase the life, right? So the animals and everything is there. So whatsoever is exempted or not can only be judged or answered by going to the notification. For services, it is 12/17. For goods, it is 2/17. Thank you, Jayesh. Alok sir, over to you.
Well, am I audible?
Yes.
Okay. So let me just propose this hearty vote of thanks. It's a very graceful and a warm good afternoon to our valued speakers for the day, our most beloved student, who is the audience of the day. Last but not the least, all my colleagues from ICI, because of whom we made this initiative possible. So on behalf of Student Skills and Enrichment Board and our valued audience, I thank the speakers of the day, CA Jayesh, Ramesh Lalwani ji, CA Abhishek Agrawal ji, for all the valuable information that has been shared with us this present time. The complicated concepts have been simplified for the benefit of our students, and that too backed by the practical demonstration is very much appreciated, sir. Thank you for sharing the practical insights and taking out time for this very important session on input tax credit and its accounting. As you all must have agree, events like this cannot happen overnight. So as the wheel starts rolling weeks ago and requires planning and bird's eye for detail, We are fortunate enough to be guided by our learned chairman, CA Sushil Kumar Goyalji, and our vice chairman, CA Sridhar Moplaji, and a very dedicated and motivated team of SSEB who know their task and are very much result oriented. Thank you so much, sir. And above all, I would also like to thank our students for being with us this afternoon. It is an honor for us that you thought to be here instead of roving in cyber lanes or chatting with friends on a holiday. I hope you all have enjoyed the learning from this fantastic session. And in case if you wish to see the recordings, the same is available on our ICI TV and YouTube channel. Now, prior to winding it up, I would request all of you to kindly popularize this initiative, this practical training module, which we are conducting every Sunday from 10:30 a.m. to 1 p.m. Kindly popularize it amongst your friends, peers, and social circles so that greater number of students can be benefited from this initiative. Once again, thank you all for being here.